Welcome to Thursday, 9:29 a.m. Pacific Standard Time. Today's date 10/27 of 2011. There was a time to be a bear, but then there was a time to be a bull. The time to have been a bull was that bear moves have great bear rallies, and that can turn back into bull rallies. And everything that we said over here earlier in calendar 2011 absolutely happened. The first calendar 2000 low, and it's all on StockMarketFunding.com. Just type in Dow Jones in the search box and you'll get the full analysis. But also there was a time to be long on this weekly chart. When we got down to the Lehman area of 10.5, and everyone has been very pessimistic, is that we had closed 4 weeks below the 10-week moving average. But now we have a 3-week close above it, and it's totally turned its course. You're back above the pink line as the 50-week and the 20-week have flattened out. That's a perfect bull case with this next overhead resistance and Dow 12,000 bull rally. The same kind of behavior that I seen was back in 1987 in October. There were other periods in 2002 of October that also are very similar to this great bull move over a 4-week big short cover rally with European, Canadian, Italy, Spain, Greece, you name it, everything that we have talked about, and Germany coming out with Merkel and Sarkozy, you name it, this and that, and everyone didn't want to be in here. And that I had said clearly that the bear would stay too long, and the bear did. We made our bear move and took our bear profits, but now we have bull profits and a bull move. That is the equal weighted mathematical equation between a descending mathematical value versus an ascending mathematical value. There are many mechanical pricing control mechanisms that go within markets. You've got the futures markets, you've got the short squeeze, you've got the gaps. We're trying to pull that money off the sideline. Most bulls that sat on the sideline, because after the big haircut that we had over here and this big rally that we said was going to end miserably and go from these top levels back in May, that we came all the way down to these bottoms. The 4-week rally is a lot of the bulls. I would say most of them have sat on the sideline. Most of them underperformed the market because what happened last May, June, July, August, and September is that they all sold out now toward the bottom end of the market, and they did. And that was the perfect time to get net long. The first calendar part of the year of the 52-week low process, as we had put it in here at the 200-week moving average, that's that green line, and we kept going long and short, and we had put in that longer term bottom, and then we finally got down here to the lower end of that Bollinger Band, and we got back above it, and we started to move back up above the 100-week and the 10-week, and that's where on the second week where it was time to get net long. Now that we've come back up to this major trend line, to the neckline, is we're going to see if that bull who has not participated and underperformed the year, is where do they come back in and get in at the tail end of the move where we'll put the highs in. And as we had told everyone in our analysis a month ago, this is the time to buy stocks. And that after many calendar years, year over year, is that October is where a time that you put in lows and then you get that rally up until from November, December, and through January. Well, a lot of that rally's already got a month built into it in this 4-week move. Now, the longer that the bull sits on the sideline is where does that bull have to chase that performance, and where does that bear get squeezed? And they are right now. We'll keep everybody updated. MMTs have learned a great deal over this whole calendar year when they were short big up here and long down here. It's all working just as anticipated, just as the analysis was. And that's for the calendar of 2011. Stay tuned for 2012, because 2012 is that, unfortunately, in the first quarter of 2012, the United States and the rest of the world are not recession proof. Meaning that, everybody believes, well, there's not going to be a double dip. Well, heck, I can tell you one thing, everybody. For the investor, sell into the rallies because it's going to be very manipulative in 2012. You don't want to get caught in this next big downside reversal. And things will be quite different in 2012 as you were following StockMarketFunding.com right up here at these tops, big reversal. Not only that, when we go back, we've seen the same kinds of things that happened in the Dow back over here through 1975. We had great rallies. Up to 1976, 1977, we came down. And for many years there, we were sideways. And it all started really right back over here in 1970. You can clearly see back in 71, and this is a weekly chart going clear back then. I'll use monthly analysis, but we had the same kind of thing that was happening over there. Humanity, human behavior when it comes to buy and sell side markets have a tendency of repeating themselves over and over and over. Not only that, we had the same kind of thing that happened in the 1930s. Go to StockMarketFunding.com, take a look at the Dow history that we've always given to people. And once again, unfortunately, commodity and food inflation is going to run rampant in 2012. By June of 2012, I'm sorry, folks, don't be a victim of what is coming, but better yet, stay tuned.